Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the show with us today is a new guest to the program. His name's Thom Calandra. Anybody who's been in the business for quite some time will know the name. He's the publisher of the Calandra Report, which can be found at thomcalandra.com. Thom, welcome to the program.
Thanks for having me, Colin.
Yeah, you know, a lot of people are getting very interested in the commodity space now. Those that have been around and invested for a few years are beaten up, but starting to see the light at the end of the tunnel. I want to start out by asking you what you think of the last 2 months, the action in these commodity stocks and the juniors in particular.
Colin, you and I talk to a lot of the same people, and gee, a lot of folks in natural resources are, practically counting on a rebound, and I think that goes for energy as well. In fact, we see oil now at $40+ a barrel. I have to wonder sometimes. The equities, the metals equities, everything from gold and platinum to silver, copper, palladium, and so on, they've had quite a run. On the one hand, as my friends from Alamos Gold tell me, when the equities for metals go higher, that's people saying the metal is going to go higher. Gold stocks go higher because people believe gold is going higher. On the other hand, when we're surrounded by people who are insistent that this rebound is going to continue, I worry a little, but I'm fairly confident myself that this rebound is in place.
Yeah, and a theme I spoke about with a guest a couple weeks ago, Itai Friedman, he's a fund manager out of California, in fact, where you're based, and he was not invested in the mining space. We, of course, had about a month's run in the GDXJ and GDX, pretty substantial, and he was saying, I think this is real, but I wasn't invested before, and I'm scared now to jump in case this isn't real, and I guess a lot of people are in that position. That begs the question, what position are you in, and how do you have your listener base and readership positioned?
Well, my audience, Colin, is just as it was in the old days when I started CBS Market Watch and MarketWatch.com, is that I invest almost right alongside my audience, and I try to have a position in the companies or the ideas and investments that I'm interested in. I probably have about 45 positions in natural resources and maybe another 5 or 6 outside of natural resources, special situations, and a couple biomedicals. And as you could imagine, 75 or 80% of those natural resources companies and investments are somewhere in the world of Canada. So now we have to look at the Canadian currency, which actually, the last 4 or 6 weeks, it's been making a rebound. I guess, the markets love the higher oil price for commodity currencies like Canada and Mexico and a few others. That's good if you're an investor. I mean, for 5 years, Colin, we've had this situation where the dollar kept getting stronger and stronger, and all of your Canadian-based securities not only were getting cheaper and cheaper on a nominal basis, but the currency was getting cheaper. So, wow, some of these losses have been terrific. I remember reading an interview that my friend Valentin Schmidt did in New York with James Grant, and James Grant says, people think I'm a genius, but last 5 years, I'm down 80% just like everyone else.
Yeah.
Now, I don't know if Colin, I don't know if that answers your question, but mostly I look at very small companies.
Well, that does answer my question. I appreciate that, Thom. You're making a good point that not only are these stocks beaten up, some of them 90, 95%, and then you have the currency on top of that. It's really just been an awful time over the past 2 or 3 years to be in these junior stocks. But after the bad times come the good times. You've been in a few of these cycles in the past, and some people have compared what we're about to go into as maybe similar to 2001 to 2007, where of course we had an epic bull market in the junior stocks. If you were invested in that time, you were probably making 100% gains per year over a couple of those years. Thom, are you able to see any similarities between this cycle coming up and any of the cycles in the past?
I think, Colin, I see a much greater appetite for risk, especially in the past 3 or 4 months. I see a willingness, or let's say a tendency, for the world's strong currencies, mostly the dollar and the Swiss franc, to let go some of their gains for the good of, let's just say, for the good of the globe. And I also see some of the interesting venture and micro-cap and small-cap companies that are not in natural resources starting to make a little headway. What bothers me or makes me nervous is that the overall market, the overall stock market of blue chips, and the bond market too, have just, I tend to believe they're way overpriced in every jurisdiction, in the UK, in Germany, in the United States, and I'm hoping that we can see a dynamic where alternative investments like gold, platinum, palladium, especially the risky prospectors, the emerging producers, the reliable, cheap producers of metal, if they can outperform. And or let me put it like this, Colin. You know, I live in what we call a beautiful tech ghetto here in Northern California, right outside San Francisco. So everyone on this cul-de-sac, and everyone in this neighborhood, and everyone in this town, and then multiply that by 10. Everyone in the Bay Area practically is associated with technology and the internet, just like I was 10 years ago. Next door is Google, literally. I'm an executive VP for Google. On the other side is Cisco Systems. Across the street is LinkedIn. And then in the neighborhood we have people from anything and everything that you can imagine, Salesforce.com, Twitter, on and on and on. And then, of course, the 100 companies' names that the public doesn't even know that are worth $1 billion to $10 billion, right? And here we have our beautiful home, and all I want is put a let's support mining sticker on my garage door because I support mining, and very few people in the world do as far as investing goes. So I don't know, Colin, I'd love to hear what you think, but hopefully we can get a bigger piece of the pie.
Well, it is a strange phenomenon right now. Everything, as you just pointed out, not just the stock markets around the world, the currency, the U.S. dollar, the art market, it's been going crazy the last few years. A lot of real estate is up, and the only thing, I shouldn't say the only thing, but the main thing that I've noticed that's gone down over the last few years has been these mining stocks. And so I guess when things get cheap enough, they at some point have to turn around and go back up. I guess one of the concerns that maybe you were starting to hint at is what happens if we get a crash in the stock market. Does it have a similar pull-down effect on the miners as it did in 2008, or do the miners actually work as a negatively correlated safe haven? Yeah,
I mean, it's happened before. Everyone likes to point to 1932 to 1934, of course, when the metals equities, the very few that traded anyway, way outperformed everything else during that deflation and depression and volatility. But it's a lot different today. Still, we are a sliver of, you take every single publicly traded metals equity, and I don't just mean gold. I'm talking all of them: tungsten, scandium, steel, iron ore, every single one in the whole world. And on obscure markets and in big markets, Australia, Japan, Hong Kong, New York, Toronto. And and the natural resources, the metals equities, are still a slice of the world's market cap when it comes to everything. So that I like that, and you have to believe that professionals and individuals who are looking for value, for real value, they're not going to find them anymore in real estate. Probably not going to find them in technology. Private equity is getting crowded, and biotech really had a nice run. Chemicals probably had a decent run here, and what else is there? It's hard to find something that you can live with and examine as a going enterprise, balance sheet, income statement, if it's a producer, that's cheap, unless it's in resources.
That's very true. We put together a chart a couple of months ago. I would imagine the numbers have changed a bit now that the mining space has gone up, but we compared all of the mining companies around the world to the top 5 largest tech companies, and the market cap of the 5 tech companies dwarfed the entire space. As an extension of that, we took Facebook against just the precious metals miners, and they were about on par with each other. So it's pretty phenomenal to see an entire sector priced so cheaply in comparison to just a few companies. Thom, I want to ask you, in terms of commodity focus, are you focused on just call it the precious metals, or are you looking at a wide range of commodities that should benefit from the changing of tides that's happening now?
Oh, I love the classics still, and I'm one of those people who believe that gold, at some point, the actual physical metal, maybe at the peak of this cycle or toward the end of it, who knows, if this is an upcycle, which I think it is, will outperform everything, even the metals equities. But in the meantime, there'll be some tremendous gains to be seen in the gold equities. I love platinum. And not just platinum, the physical metal, but a couple of the platinum producers and developers. Right now, coal is cheap. Thermal and metallurgical coal is extremely cheap. Tungsten is cheap. Graphite has not had a move. We saw a move in lithium, at least in fact in lithium, in the actual physical lithium. But and then in the lithium developers, there aren't that many producers in the world, but nothing in graphite, which of course is an important ingredient for renewable energy batteries. And then I'm starting to look at farmland. I don't own anything in that area, but I remember looking at Argentina farmland in the early 2000s at CBS Market Watch when I was running that, and now I'm looking at a company called American Farmland Company, AFCO. I don't own it. It's 60% of its properties are in California, and it produces mostly, let's call them high-end crops. Apricots, walnuts, raisins, that kind of thing. So, in answer to your question, Colin, yeah, I think there are a lot of opportunities there. I'm a little nervous still about the energy markets, and I'm probably not going to venture into anything that's pure energy, unless there's an opportunity like a fulcrum opportunity. A fulcrum opportunity is where if we see some more bankruptcies in the energy companies, there may be some opportunities opening, owning the unsecured bonds, right, so that you can take over assets from these companies if they do file Chapter 7 and have to restructure, or Chapter 11, I should say. And then, but in the end, I'm going to stick with the classics. I think gold is going to, will be the star, and some of the producers to me look great, and some of the emerging producers that are cheap and relatively unknown are my favorites because they're small.
So, Thom, let's talk about a couple of those names, if you don't mind. Maybe a good place to start is some obscure emerging producers in precious metal space. What kind of names are you looking at?
Well, I always used to. Well, I still own Endeavor Silver, and that's run by a guy named Brad Cook. He's a geologist in Canada, and it's a silver producer in Mexico. And the sister company there, that's really been in kind of a stasis or a file cabinet, let's say, for years, if not a decade, is Canarc. So I was down there in Zacatecas, Mexico, looking at their project, El Compas. It's a silver and gold project that had first been exploited like in 1570 by some small scale shaft mining, and Brad and Canarc took it over and put a guy named Catalin Chilafisky involved in charge as the CEO. It's a very rich area. While we were there in Zacatecas looking at the properties, we went by the state-owned mill that supports the community because it's a mining district, and that's been kind of mothballed. Canarc took it over just recently, and they're starting to have some great results from their drill holes. We're talking like 55 grams a ton of gold and 350 or 60 grams a ton of silver over small meters, but still 2.5-3 meters. So that's cheap. It's doubled, but it still can't be more than a $15 million market cap. I think that once, and by the way, Canarc managed to put together a very creative debt deal, debt that did not dilute shareholders, and that's one of my pet peeves: is companies that continue to dilute shareholders, common shareholders. So I'm hopeful that this one will start up by the end of the year, a mining rate of maybe 500 tons per day, and I assume they'll probably use Mexican contract mining crews and equipment. Small footprint, could be a very big return on investment. I think it might be a 10-cent, 11-cent Canadian stock, and I own that one. Colin, I think the ticker there is maybe CCM.
Yeah, that's right. CCM on the CCM. Toronto.
It's actually on the big board, yeah, strangely enough.
Great. So, Tom, what about maybe one or two other names that you're interested in and own right now?
Something that's been terrific lately. Oh, by the way, I guess I didn't say on energy. I do own one sector of energy, once again, because it's so cheap, and that's uranium. Now, some of the uranium equities have been rocking because of NexGen energy up in the Athabasca Basin. They've had these insane grades so high that when there is mining finally on these projects up there, NexGen's properties will require some remote mining because the ore will be radioactive. That's how high the grades are of U3O8 that's down there. Now, I don't know NexGen. I had an opportunity to own it, but I watched it. I wrote about it occasionally. I got to meet the management. It's run by an Australian guy. But I thought, well, I did miss this one. None of the other uraniums really are doing that much. How do I get a piece of NexGen if this is a real company that has a big footprint in the Athabasca Basin? So I started buying Mega Uranium. Went out and met their CEO. Mega is MGA. They own 20 million shares of NexGen. They own about 400 million, Colin, shares of Toro Energy in Australia, another uranium company, and they own a few other obscure uranium securities, and they actually have a royalty that gets them about 500,000 Canadian. That's been terrific. I mean, it's only up a couple pennies since I started buying it, but I'm comfortable with the management after meeting the CEO, Richard Patricio, in Toronto a few weeks ago. It's a, how would you say, it's a backdoor way into owning NexGen. NexGen looks like it's going to be a survivor, may even split into two companies. Who knows, because it has so much on its plate. But at this point, I'm probably not willing to that stock could double from here. But mega uranium could quadruple and quintuple for the same reason. So that's one. And then also on the uranium beat, I like Canalaska, right? That one's been so far has tripled in about the 3 months that I've owned it. And I've gotten to know the management there, Peter Dassler. He's a New Zealander who lives in Canada. They also have a footprint up in the Athabasca Basin and around that area. I want to say Manitoba, Alberta, Saskatchewan. They have plenty of projects, like projects that they've joint ventured with Cameco and others, international concerns. It's still very cheap. Probably the market cap can't be more than 15 million. It was 3 or 4 million when I started buying it. And so there, Colin, you have an example of a company. Canalaska, I believe, is CVV, and in Toronto on the venture. But there you have a company where you're buying something at a nominally small price, 5 cents, 10 cents. In this case, I think it's 20-something cents, and you could see a triple.
Yeah, well, that's a huge amount of leverage in the Mega and Canalaska story there. Thom, I think this is a good place to put a bookmark in the conversation. I appreciate you coming on the program and sharing some of your favorite picks.
Oh, it's a pleasure. I love talking with you, Colin, because you're young, you're motivated, and I think that I just want to share one thing with you. That is, a lot of the young people in this business don't realize that it can be a lot of fun to make money, because you guys are so young, you haven't made any money yet in this business. And when we start making money again, it is a ton of fun. So I'm hoping to see that happen.
Yeah, absolutely. Nothing's more fun than making money. A lot of work that can go into it, but timing certainly helps. So hopefully the next few years is good timing for metals and mining investors. Thom, thank you so much for coming on the show.
Hey, Colin, thank you very much. I love it. I'll be listening to Palisade Radio there.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?